The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 19th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, TV Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free, pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. And in the Tiger's Den, any ping will do. So right now, let's go ahead and get this show kicked off because this is Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 42 points at 19,761. S&P off 5 at 2267. NDX 100 is up 4 points. She's trading at 50.59. Russell 2000 off 11 points, about 0.8%. The semiconductors are flat. Gold is off $13. Silver's down 34 cents. That's about 2% to the downside. You've got light sweet crude up 12 pennies. Leading the charge, the upside, you've got CSX up $7, Canadian Pacific Railway up 7, Netflix up 6, Checkpoint Software up 6, Norfolk Southern up $5. I can't really tell you what it is to the downside. I'm going to have to refresh my system during one of the breaks out here. But you can always ask me about something that might be moving to the downside. So where do we want to begin? I've already got one question in the den asking about the yen. Another question that came in prior to Danny's asking about currency, which is from John. And John, hello to you. Won't use your last name, but nice to hear from you. Happy New Year to you. Not Z, a different John out here. John in Sarasota, formerly of John in Michigan, and maybe still in Michigan, but Sarasota. He says, please explain the plight. The plight. That's a big word for me. The plight of the dollar when China devalues the yen. Thanks. So that's such an open question. I'm really not sure what you're actually asking of me. So I probably will go in different directions and may not even answer your question, but I want to answer your question. So please write back maybe something a little bit more specific that I can try to assist you with. But in the meantime, let's do the following. So if I try to rip apart the question, please explain the plight of the dollar. So really referring to the dollar, U.S. dollar, typically people refer to that, and we technically wise, we go take a look at the U.S. dollar index, right? The yuan doesn't impact the U.S. dollar index. One iota. Doesn't really matter what China is doing. Now, not that currencies can't impact each other, but when it comes to the valuation of the U.S. dollar index, or if you trade UUP as an example, and whatever other indices, ETFs there are for that, the yuan doesn't affect it. Just like the other 3,422 currencies that aren't a part of the U.S. dollar index. Not that there's 304,030. I don't know how many currencies are out there. There's a blank load of currencies out there. You see, the U.S. dollar index, and if this is not the question, I apologize, but I don't know how else to answer the question out here. 57.6% of the U.S. dollar index is the euro. Japanese yen, 14%. Great British pound, 12%. Just between those four, you basically cover almost the full kit and caboodle, nearly 85%. The other 9%, or of that 15%-ish range, you've got the Canadian dollar, the loonie, that's 9%. And they take out the other two, the Swedish krona and the Swiss franc. So that is what makes up the U.S. dollar index. The Chinese yuan doesn't impact the U.S. dollar index one bit whatsoever. Now, how does it impact us? How does it impact you? That would be a different story. You know, just like with regard to all currencies or pairs, it just depends whether you're buying or whether you're selling, whether you're buying goods or selling goods out there. You know, it's like take a look at the U.S. dollar. I'll get back to the Chinese yuan, but here's the U.S. dollar index. Let me just put this on a longer term basis, which is weakened quite a bit. I don't know if any of you have ever gone over to London town, and you know, but great place. Hey, a lot of history over there. You can go stop in and see the Queen, and you know, so take you back to the time period. And I was over there in this time period here. May not have been November of 2007, but it wasn't too far away from that time period out here. And at that stage, we were dealing with a 2-to-1. So in other words, it took $2 US to get 1 Great British pound. Today, we're near par. Okay, it costs you $1.20 out there versus $2. Now, for those of you that have been over there, you know this to be the case. You might sit down and you might say, hey, I want a Heineken, or I want whatever beer it is you might be drinking out there. Maybe it's a Stella Artois out there. And you might be used to paying, I don't know, $3, $4, $5, $6, whatever type of bar it is that you hang out. It would be the same price for the same beer basically over there, only it'd be in pounds and cost you twice as much. Folks, if you have never been over to the UK and you've always wanted to go over to the UK, I'm telling you, it's on sale. Now is the time to go. Not that our currency, the U.S. dollar index, or the U.S. dollar can't get stronger against the Great British pound, but where it really has an impact is whether you're buying or selling, right? It's just like back in 2007. When I owned my retail stores in the Disney parks, every now and then, maybe more than every now and then, in the late afternoons, I'd go ahead and take off and go play golf on one of the courses at Disney or something. In the summertime, it's pretty easy to do and get around in a click here, you know, of about 2 hours or so. And during that time period, you know, it always run into people from the UK that were visiting in the U.S. and they were like, "This is great. Everything is half off." Right, because of the 2-for-1 exchange out there. So in the case of the yuan, you know, if they continue to devalue their currency and you are buying goods from them, hey, it is a great deal out there. So, you know, it's I just want to make sure, because there are many people that do believe that, because there's all this talk about the yuan. Look, that's going to impact debt, you know, things of that. If you've got transactions individually going on with another country, that's where the currency devaluations and so forth are going to have the biggest impact. Hey, prices for goods at Walmart, who is basically China Junior, right, should be a little bit less out there because so much of their product comes from China. So, and if we take a look at, here's an example. Here is a chart here where you've got the U.S. dollar versus the yuan, right, being devalued. And here is the U.S. dollar index on the bottom. There's just no correlation because it's not a part of it. Whereas if I just simply go ahead and turn off the yuan out here, see if I can do this real quickly. And of course I can do anything real quickly. Here is the euro, which has more of an impact with regard to, I turned off the wrong thing out there. Here's the U.S. dollar index and here's the euro chart. You kind of get my drift. Steve Rhodes with TFNN. We come back, we'll go take a look at the yen. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 39, S&P is down 5. Now, in one of our dinners had pointed out, said, hey, Steve-O, the yuan, the Chinese yuan is now a part of the dollar index. And so, and I have heard that from others. And so I did some, what I consider to be extensive research to say, did I miss something? Not extensive research during this last 2 minutes, by the way. This is like weeks ago. Month ago, whenever it was, and I could not find anywhere. And so one of the easiest ways to actually prove it and verify it, because you're trading it, is the UUP, which is the ETF for the U.S. dollar index. You just go take a look at that, and you can see what holdings are inside there. You're not going to see the Chinese yuan. Now, if I am incorrect, please, somebody send me an email, Steve at TFNN, point me to somewhere that shows that when you and I take a look at the U.S. dollar index or any one of those ETFs, that the Chinese yuan is represented inside there. And because I cannot find it. And so if it exists, man, please share that with me so that I can correct this. Okay, so we had a question about the Japanese yen. So Danny was saying, hey, can we take a look at the Japanese yen? Here's what we know. Well, first, you and I know the following, right? We do this all the time. We know that there is a direct correlation between the direction of the yen, bonds, and gold. So it really makes sense to go take a look at, because we do believe that currency rules the world out here, that we really need to understand with regard to those two instruments. It really is more than that, because that means that gold travels in the same, or the miners typically travel in the same direction as gold. So you got to really pay attention to what's going on inside of the yen, Japanese yen futures, what we take a look at here, because I don't have any kind of a delay on that. But if I go back to the currency pair, no, actually, we're just going to go back to the actual futures contract. We can see that prices moved down to a trend line. That's a trend line off of the low out here on January 3rd. That becomes your first touch point. Next touch point is going to be the low from January 9th. That happens to coincide with January 11th out here. And so the trend right now, which is its trend, is still to the upside. It closed below that trend line, and that says, okay, I'm going to go ahead and go lower. And go lower to where? Well, I would say it would be Stevie's red line. If we take a look at that red line out here, the price point is going to be 0.8591 is the number. If you take a look at the very bottom panel of my screen, you'll see a little red line, another horizontal red line, different than the squiggly red line out there. And that horizontal red line represents the zero level. So we know that the price oscillator is below zero, but it is also rising. So rising below zero says at least counter trend rally. Could be a bottom, but at least counter trend rally. Of course, on this daily chart, we know that there was a nice little Tom DeMark TD sequential signal that occurred back out here right around the time period of December the 18th. That is a bottoming signal. Was confirmed once price broke above Stevie's red line. So all we are seeing right now with regard to the yen, which is weakening, yen futures is seeing a pull back to a trend line. If we go take a look at, we add now our TAS daily profiles, weekly, daily. In this case here, let's go see what we're going to go ahead and actually add. I think it's going to be primarily the daily that we take a look at. Now we've got the weekly and the daily. Let me turn off the trend line out here. So we'll turn that off. And what we can see is that if that trend line breaks, Danny, we had Stevie's red line. That's a number I know you wrote down on a pad of paper, which also is somewhat coinciding, and there goes that word again, with the bottom of the weekly market profile and the bottom of a brand new daily profile that formed today. And that says where real support is in the yen futures out here is 0.86024. Now, especially if you are an intraday trader of any of those gold vehicles, you've got to be paying attention to what the yen is doing and on different time frames out here. It's possible that the yen has formed a bottom. But if it hasn't, we know that price is likely going to go ahead to 0.8602. That's going to put pressure on metal. That's going to put pressure on the bonds. Now, the reason why I say maybe it's formed a bottom, it keeps trying to form a bottom. We've got a little hammer candle that formed just before we were coming on the air out here. A hammer candle can be a signal that the market, its meaning is that the market is trying to hammer out a bottom. Now, in the case of the yen futures out here, the A to B equals CD pattern out here kind of looks like this. So it's made a 1 to 2 A to B equals CD, kind of just slightly below. But in that 1 to 2 range out here, oftentimes, if you are a holder of the art of timing the trade, most of you are, I know that. You know that there is a page. I don't know the page number. Somebody should send that to me. So that there is a page that will tell you when you get that type of A to B equals CD. I will say a confirmed 1 to 2 A to B equals CD. That's where you see a change in trend. So, there's the potential for that bottom. Nothing more bearish than a failed bullish pattern out here, and that's in essence what we have when we take a look at the 30-minute chart here for yen futures. The real key, and I pointed this out to subscribers this morning so that they could anticipate more pressure on their long bond trade and more pressure on their mining trades. That's why they knew at 8 o'clock this morning what the outlook was going to be for the day. What needed to occur inside of the yen futures was that yen futures needed to close above their TAS market profile on this 30-minute basis. Never did. Got up there, tested, but it actually never even tested yet. Tested at about 8 o'clock, about an hour after I had sent out. I need to get rid of that thing right there. There we go. About an hour after I'd sent out the newsletter. So at 7 o'clock in the morning, everyone knew what needed to occur, and this was very helpful for those that are intraday traders, because those that are intraday traders knew that they could watch this profile level out here inside of the yen, and they could go ahead and fire away to the short side just for an intraday trade, and also would know that, hey, if you see price get above it, flop those trades out there because price is now breaking above resistance zones. That is really the same piece of information that we have right now. Is there a bottom that's trying to form? Yeah. Is price just slightly above that oscillator and change line? Yeah. But the real key number out here, Danny, and for everyone else, is going to be 0.8, as long as you're using a 30-minute chart as one of your gauges out here. It's going to be 0.8724. If price closes above that, then you'll see bonds bounce or have formed their retracement bottom, and you will see the same thing occur with regard to mining equities and so forth. So hopefully that's not too much of a focus on currencies, but you and I do that. We take a look at that because we know the impact that it has on so many other vehicles. Now, the cool thing is if we just simply transform that, right, we've seen this nice move in the yen out here, not necessarily nice depending on which side of the trade you're on, but if we go take a look at the GDX, right, so the vehicle for all, not all, but many of the mining equities. I don't know, 40, 42, 47, something like that out there. We can see that the pullback, it hasn't been, remember, this is a directional correlation. It is not a pip for a tick kind of a thing out here. It's not a tick for tat. But what it is, it's a directional tool that you and I can use. And in this case here, what the GDX has done is it has pulled back and it has tested the top of its TAS daily profile, 2258 to be specific. The volume today, 31 million shares. That's after moving higher a couple days ago with 94 million shares. That's after moving higher with 135 million shares on January 5th. That, folks, is what you call a light volume pullback. So the mining equities, even in light of what we've seen go on inside the currency that really is driving the direction, the miners are holding up muy bueno. They have got a lot further. Did I say a lot? I mean a lot further to run to the upside. But they need help from the yen. Steve Rhodes with TFNN. You're ready.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow at 51 right now. S&P is down 6. So, I was going to show you something that was important to pay attention to. Unfortunately, I went ahead and rebooted this. When I say I exited the e-signal app. Okay, good, it's back. Exited the e-signal application, restarted it so I could get the losers to the downside. It turned out that I was the loser out here because all of a sudden it wasn't populated with an important tool that we wanted to take a look at. That important tool here, this is a 4-hour chart for the ES Mini. And so that you can see the boundary lines that have really been established for the last several days since the 17th at about 6 o'clock in the morning out here. You can see these TAS profiles. These are the white horizontal lines going across my screen. This is the trading range that we are in. Until it gets broken, the assumption should be, that we are going to maintain this sideways consolidation. You know, when markets are consolidating, it can be very tricky, very difficult to trade. The very first thing that you should be trying to do is try to identify both the top and the bottom of that consolidation. Because from an intraday perspective, what you want to do is you want to sell the top and buy the bottom. And you give yourself a little bit of room and be ready to go ahead and flip the position to the other side on a breakout or a breakdown, which, as you know, from a consolidation should be equal to or greater than the actual consolidation move. Now, in this case here, on this 4-hour chart, you can see that the point of control, maybe you can't see it. So let's go ahead and close and eliminate price so that you can see that. Now you can see here the box itself. This is where we're in right now, the current box. See how that point of control, little dots here, closer to the top, much further away in proximity than the dash line, the bottom of that box out here. This tells us that the pressure inside here, the bias is the sellers. The sellers are the ones. Here is Humpty Dumpty's wall out there. And that Humpty Dumpty wall is full of sellers. They are just eager as can be to sell the 2267 level. And they are as comfy as can be to close out those trades right around the 2059 level out here. Where did we bounce to a little while ago? We got down to a price point of 22.59 and 2 ticks, 50 cents out there. So this is the pattern. I do not anticipate that this pattern is going to change today. Could. And then if it does, then you know you're looking at about a price range of 10 points to the downside, 22.58. You'd get down to this little candle session here from about the 12th. That low is 22.48. There's your 10-point move on a break below. Likewise, you'd have a 10-point move on the break above. But I don't really think that is what is in store for us for the rest of the day or overnight or even into early tomorrow out there. But just know that this is the consolidation. Here's where the buyers and sellers, here is the market profile that best emulates what is going on inside of at least the ES Mini. If I take a look at the NQ out here, just for those of you that are trading that vehicle, and I don't know if the 240 here, the 240 is not is not providing you with that type of information out here. So we'd have to go do some further research to try to figure out, where is the top, where is the bottom with inside of the NQ. But inside the ES, that becomes kind of a no-brainer trade, and isn't that really what we're all looking for? And then I say no-brainer. I mean, every trade has risk to it, but this is a set of some great parameters out here that you can use as we speak right now. With regard to the Dow, and we didn't even talk about the Dow. Well, let's just turn over here. Yesterday, you and I went through, I believe it was yesterday, we went through every primary indice out here to see whether its message was bullish, bearish, or neutral, right? Red, green, or yellow lights out there. And what we saw was basically all of them, with the exception of the transports, and I can't remember, maybe one other, it might have been the NDX 100, had given us sell signals. All right, it was the patterns that you trade or patterns that I trade. There is no question that all those indicators, all those signals had given us sell signals. Now, in the Dow, which was the first one really to generate a sell signal, that was just simply because of the presidential cycle. You might say, what do you mean? What do you mean, Chester? Actually, here is a synopsis of 2016. I've shared this with you before, but it's worth sharing again because there's a annual seasonal cycle. And I know some of you guys, you're blue in the face from hearing this, but repetition is the mother of, of something out there. It's how we learn. But here is 2016 Dow's chart. And when we take a look at this, the Dow typically makes a top on January 6th. Now, I'm just saying that the high of the Dow so far has been January 6th. Now, last year, it came in on December 29th, a few days early, just arrived a few days early. The bottom normally comes in January 30th. In this case here, it was February 11th of last year. Pretty darn close. PDC to me. Then the market moves up into May. I don't have that. It's usually like May 19th out there when it forms its little top out here. It moves down into June, usually around June 25th. This year it happened to be June 27th, in honor of Brexit out there. Then the Dow goes on, makes a nice high right around July 21st. This year was July 21st exactly. When I say this year, I mean 2016. Goes down, typically makes a bottom right around October 13th. This year happened to be November 4th when that bottom came in. There was a pattern down there and so forth. We're back to January 6th. We've recycled back in that annual cycle, and that is there. So that says to both you and I, and the Dow has given us every indication that it's still, now it hasn't really moved much in the way of moving lower out here. It's really just back to the swing point from December 30th, or at least now that's a closing swing point that we're taking a look at here. And we ought to go look at the diamond, see what kind of volume as we're moving into that area out here. But there's nothing that gives us an indication that there's anything different this time. Will it be different this time out here? And the answer is, I don't know. But it doesn't look like it'll be different this time. In fact, right now, today, the number to be watching inside of the Dow is yesterday's low. Why yesterday's low? Because what was yesterday? It was January 18th. But more importantly, it was a hammer candle. And so once that low gets taken out, you know the expression, if you're long, you're wrong out here. And that's true, but you got to come down to the next level of support. But today, so far, New York Stock Exchange is the one that's giving us the biggest signal, so to speak, because finally its price oscillator, the difference between two exponential moving averages, 19 to 39 of its advanced decline data, is now down below its zero threshold level. When you get below the zero threshold level, in this case here, we now have unanimity. No, we have a quorum. We have synergy. What's the right word to use here? We have all three of them are saying aye to the downside. So now we even have one more signal today, adding to the mere fact that the market should move lower through the 30th. Or around the 30th till we see some pattern that comes into play. New York Stock Exchange now finally toppling over, so to speak, with enough advanced decline data to say it is now sellers in control of that indice as well. The last piece of the pie. And what kind of pie do you like? Do you like lemon meringue, key lime, apple crumb, Dutch apple crumb? Blackberry pie, yeah, all those sound pretty good to me. None that we should actually eat, but they all sound good to me. But the next key is really going to be inside of the VIX index. It must close above 1276 to give it the all clear ahead, which is all clear ahead to the downside. Hasn't done it just yet. That's the last piece of this puzzle. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 42, S&P is down 5. Now, Dennis is a fan of apple crumble pie out there, and who could not be a fan of that? And you've got to admit, there's like a gazillion ways to make it. And, you know, if you're ever up in the New York area, you ought to check out not that I've ever tasted it, but you ought to do it. I sort of have heard. And actually, it's really pretty good. From a 4-in-20 Blackbird. That's what you got to check out. Now, their crumble, Dennis, is a tad different. It has got, of course, salted caramel, right? The caramel apples out there, right? So, you know, and if you've never had you probably had caramel apples, you know, certainly as a kid or what have you. And so it only makes sense that you ought to try a kind of a salted caramel apple pie out there. It's a nice little twist if you haven't tried it out there. And then for those of you in the upper New York area, I believe out there is a place called the Blue Stove. So lots of great apple pie. I unfortunately for me, and I try to stay away from all those sweets out there, very rarely is there a sweet that you could put in front of me where I would say, nah, I don't think so. So it's best just simply not to put in front. It's amazing when you eliminate sugar from your body, first how well you feel after a few days, and then actually how much weight you actually can take off in a short period of time out there. So it's a nasty thing. In any event, you didn't really want to hear about that, but yeah, not seeing a lot of cards and letters come with regard to requests for what we should go take a look at. So it's kind of a slow day. You know, we did talk about the diamonds out here. We mentioned that December 30th time frame just to see what we have. And you'll see there's no volume today. Just like yesterday. In fact, let's first finish today. Let's stay on board here. December 30th, though, inside the Dow Diamonds, which had the most recent move down. So it's the swing point that we would measure where price is going against at 4.2 million shares. Today, 1.5 million shares. So we know that's on light volume out here. Price coming down, testing the TAS daily profile out here. This market could consolidate for a while, folks. Doesn't, you know, those that are waiting for the inauguration to do something miraculous to the market out here, I actually don't see it. Yeah, all those signals that say you should be short versus long, I'm getting towards that stage because the 30th is sort of just around the corner, that this is maybe a good one to sit out and look for that long entry out there. Because the typical move between the January bottom and the May top, that is one of the bigger moves inside of the market traditionally, and it's one that you certainly, the other one is the Santa Claus rally, right? Is that October bottom out there. Those folks that are just looking for the Santa Claus rally are missing Santa Claus all together out here. I did want to take a look at the Qs to see what did the volume in the Qs end up being yesterday. Was it 13 million shares? What was it? No, it didn't even make it to 13 million shares. Had to be the lightest volume day in a long time. So our man David White would be able to tell us, probably right off the tip of his tongue. David White, Mr. Polar Bear, when was the last time the Qs did 12.5 million shares on a non-holiday out there? And again, as I had said earlier, the Qs really haven't given you a topping signal, but by goodness, folks, that is as good of a topping signal as you get out here. To what degree is the retracement? If it were a topping signal in the Qs, you're looking at 121.34 as a likely area of support out there. So there were a couple of requests that came and said, hey, would we go take a look at the semiconductor index? I think that was a request. So we're going to treat it as a request out there. That way I know exactly where to take the show out here. It's very fluid. And if we take a look at the, I'm referring to the show, with regard to fluidity, though, we can take a look at the semiconductors, which has been a nice move over the last couple of days. All it's really been doing is moving up towards Stevie's red line. Today didn't get all the way up there. 929.41 is the number out here, but it's still, Mr. Bill, it's still, as I see it, still also in a sell mode out here. If price gets above the 929.41 level, then that would be a different story. But at this stage here, I guess you got to really expect more sideways-ish type move, versus anything else. But it's got either a yellow light or a red light, and as Mr. Bill's pointed out, it's like watching paint dry in January. Does paint probably dry is quicker in January than it does in July? I would think, does it not? But I know what you're saying. It is pretty boring. That's why I'm asking for all the assistance that I can get out here to assist me with where we're going to go to look at things inside the chart. Oh, not in Denver. Okay, hey, let's take a look at Wells Fargo WFC out here. See what it is doing. See what kind of information we can get out of here. No idea what those red lines are. I have a caller. Hey, that's a beautiful thing. Didn't even notice that. Marie, thanks for holding. I appreciate it. Thanks for calling. How are you today?
Hi, Steve. Fine. It's not snowing, and we're in Erie.
Okay. Now, are you in the part of Erie that is in the so-called snow, snow belt? You get just simply the bar. Okay. So biggest snowfall you ever saw or lived through? Oh,
yeah. In this area, probably a couple of feet.
Couple of feet.
Yeah.
And what's on the ground today?
Zip.
None. And we're January 19th. Okay, well, that's a good thing.
Yeah, that's pretty awesome. I mean, we're starting to feel like global warming might happen.
That's too funny. Now, you would like to take a look at, thanks for calling, Procter & Gamble.
Yeah.
And tell us what you're doing and how we can help you.
Well, I've noticed that a number of stocks in the consumer area seem to be perking up, and I was wondering if this is a new sector to start looking at, and would Procter & Gamble be one of them?
So, sure. Okay, so let's take a look at it. And what we're taking a look at here, folks, is I kind of go, Marie, I want to go backwards a little bit. So, and I don't know, so I just, the XLP is the consumer staples area. And in the consumer staples area, it's one of the ETFs that we took a look at yesterday that looks more like this has formed a bottom than anything else out there. And so this is Procter & Gamble a part of the XLP? Do you know just off chance?
No, I don't.
Okay, so we'd want to make sure. I mean, we'll go take a look at Procter & Gamble anyways, but I'd like to take the XLP is one of the sectors where I see the most promise at this stage. And the reason is that a couple of days ago it was moving up into a swing point with volume. That was a swing point from December 14th that had 25 million shares. And it was moving in with 19 million shares a couple of days ago. Yesterday was light volume, just like the market. And so we really want to see this thing take out its high from December 14th. But it's one of the areas that I definitely would be taking a look at. I would especially like to, if Procter & Gamble were inside the XLP, then the more the merrier. But I would really look inside the XLP to look for what are the strongest stocks at this stage of the game and see where they're at. But specifically with regard to Procter & Gamble, PG is the ticker symbol. Here's what we know that it is doing. And it was also moving into a swing point, which was from December 14th. That's where we kind of measure, hey, is there more demand so that this thing is going to push through a potential resistance zone? And that was a swing from December 14th that had 12.2 million shares, pushed into it a couple days ago with 13 million. So yes, that is what it is saying to us. Stay on through this break, and let's take a look at, and Mr. Bill says it's 12% of the XLP. Let's take a look further at Procter & Gamble. Okay, Marie?
Sure, thanks.
All righty. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 61. We're on the line with Marie in Erie, Pennsylvania. We're taking a look at Procter & Gamble. And the question is basically, is this a stock to consider for her portfolio out here? And the answer at this stage here is yes. We believe that this sector is one of the better looking sectors as we speak right now. Now, what I would suggest, and it's pushing into a swing point with volume. Didn't clear it, but it's pushing into that December 14th. So that's a positive. I would say that your buy on this, Marie, would be one more trip down towards the lows here from January 10th in the 83.24-ish type range out there. And preferably, as it's moving down into that level, it would do with less than 11 million shares. Then what that would set up is the potential here, still in this little sideways consolidation zone, but it would set up the potential for a little lightning bolt pattern in A to B equals C, that would give you a price projection of 87.80. But my question would be, what's the period of time that you're looking to hold Procter & Gamble?
Well, actually, I was looking to hold it for maybe years even.
Years, okay.
Because I'm looking to have some basic companies in my portfolio that stay, unless they, get into trouble somehow.
Sure. So at this stage here, what you'd really have to watch, so like, for some reason you get into it in this lower 80, and the reason why I'm using that 83.24-ish range is that if the market's going to maintain the normal seasonal cycle where it should pull back into January 30th, and so you kind of also have to use the date as a potential timing mechanism. We ought to see even Procter & Gamble pull back a bit, even the XLP pull back a bit, and then hopefully it won't break this swing point here to the downside. It'll be coming in with lighter volume. Then that gives the odds are then stacked in your favor that, okay, it's ready to start moving higher. What you want to watch is, let's say it works out that way. So as you come into the May-ish time frame, you'd like to really see this thing all the way back and take out its actual highs of 90.26 out here from October 10th. As this gets back to, let's say that it works out this way and it gets back to 87.80. That's going to be the next place where we would see kind of a sell type potential pattern. It's called a Gartley sell pattern. That's the range. It doesn't occur until you actually see some type of bearish reversal signal, a candle out there. So it could also go to 89.04, and that pattern would still, in essence, be in effect out there. What you really don't ever want to see this thing do is get below 81.18. Because then long term, this would be setting up an A to B equals CD to the downside. I'm not in that camp that that's what it's showing you, but because you're saying, hey, I'd like to hold this long term, you would also want, even if you get into $83 as an example, don't let this thing get below 81.18. Because then we'd have to really reassess where Procter & Gamble is going, and it could be going down a lot further, where you'd want to go ahead, take your small loss, and then look at it at another time, probably down around the price point of about $76 or $74.
Do you think that it's not a good candidate for that kind of
I don't know.
position?
No, I can't say that it. Well, so when you ask that question, then what I would do to answer that as best as I can, I just take a look at a longer-term chart and a monthly chart. And is there anything wrong that I see here in Procter & Gamble? Absolutely, positively not. I know that you're going to have resistance at the high of about 93.89, but it's just going to be a resistance zone. But is there anything that, as I look at this on this chart, that is bad news? There's nothing, Marie. Not a darn thing.
Okay, because I was wondering if I was looking at it too soon. That's why I was calling.
Just let's watch it right around January 30th. And I'm sorry that we're out of time here.
Okay,
but
thank you.
let's keep an eye on it. And thanks so much for calling. That was Marie in Erie. Folks, stay tuned. Our favorite polar bear, David White's coming up. Have a terrific Thursday. We'll see you on Fantastic Friday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.